Hello everyone, are you an option trader? Then this video helps you in finding the path to become successful. You must be wondering why people go wrong while trading options. Sometimes people are right over 60 times or 55 times, but still they struggle a lot to make money by trading options. I'm not talking about a trade to trade, I'm talking about from a longer term perspective. This may be because their understanding over the instruments may not be good as timing the market. So trading in options is very different than trading in equities. So this is Murugan from EQSIS. I'm the one who's going to take you through the rest of the video. And let me take a few minutes to share the analogy that makes it much easier to understand the overall context of this video. Here's the challenge between two men. One looks tall, muscular and stronger. The other looks shorter and thin. And the challenge here is the arm wrestling. If you ask me, being a shorter contestant, will I accept the challenge? Definitely not. Because having known the opponent is way stronger than me, if I accept this challenge, it's merely irrational out of excitement, but it is a foolish act. But if you look at this particular challenge, the weapon used is the sword. Being a shorter man, I may be interested in taking this weapon because this gives me a better comfort to attack the opponent, but the opponent got not just muscle power, he got a lengthy hands too. In this case, still the outcome may not be in my favor. So when I understand my pitch is not in my favor, the smartness is to refuse the challenge. But if you look at this, here the weapon is the gun. So when the gun is used, the muscle power, height of the person hardly matters. It really depends on how well we hide and mark the opponent. But by the way, gun is not necessarily the best weapon. It really depends on the particular situation. If you ask me in the context of a stronger person, for me, as I said, the gun may not be the wise option for me to attack the opponent, because having known that the opponent is a weak opponent through muscle power and height, I better take the sword because that gives lot more advantage over the opponent when compared to the gun. I hope you understand the overall context, what I'm trying to convey. I think to win in any battle, it's not about our strength. We need to understand the instrument and use it wisely. This is what on the whole is missing when it comes to an option trader. Remember one thing, option traders need to understand the characteristics of the instruments and use it wisely. Let me tell you what literally going wrong with the same analogy. Let's say you pick up the gun and if you approach the opponent and you stand close or nearby, and if you start hitting the person as if like you hit through a sword, that is not the way you hit the opponent using the gun. You can take a stance, you can actually give a gap away and you can actually mark and shoot against him. But if you hit a person as if like you hit through a sword, it is a foolish way of using that instrument. This is commonly happening among the option traders because most of the option traders today, I see that they are trading options as if like trading in equities. Because if you trade in equities, you understand that it is pretty much binary, because when price goes up, we make money. For price goes down, we lose money. But being an equity trader, what they do is they tend to take long-term positions and they keep averaging it. But over a period of time, they find it bit wrong and they venture into the future trading. Because when you venture into a future trading, you understand one interesting aspect, because it actually gives you a lot of margin. So as you have a limited capital, you can still play with a lot of quantities, but over a period of time people realize that leverage is something can equally bad, which can wipe out people. But that is the time people realize that sometime option trading may also be interesting, because when you look at option trading, as a buyer of options, we are always limited with the downside risk. That makes it pretty interesting for people to take positions. But over a period of time, again, they realize that option trading do carry a premium as a risk, which may be the reason most of the people get wiped out of the market. And over a period of time, again, people realize selling an option may be a wise option to do it, because they find a gravity, because the time value, volatility and everything in their favor, and they see, why not, I can sell options, harvest the premium, become rich over a period of time. But sometimes they miss a point that they have to be responsible for the option buyer when it comes to the claim arises. Okay, now what is the point which I'm trying to convey? See, there is no one instrument here by default favorable to a trader. Every instrument here shares a different character. We need to understand the pitch and use the right instrument or a right combinations so that we make an edge over the opponent and make money out of that. So that is what the whole pitch I'm trying to convey here. Remember one thing, if you really want to succeed the options by trading, then you need to understand one thing, that option behaves differently than equities. So don't trade options as if like you trade equities. Don't average options. Don't be always an option buyer. It's not necessarily an option seller make money. You need to understand the character and use it wisely. That is what something which I wish to convey. But to make money out of options, the very first thing you need to know is how to time the market and how to choose the right instruments. But among these two, which one matters a lot? That may be an interesting, because we see sometimes people being right 60 times out of their predicting the market, timing the market, but they still go wrong because their choice of instrument or the way in which they constructed the strategies may not be the right ways of doing it. So how accurate are you matters, and what really matters when you understand the overall video is what strategy you are adapting to it. Even if you are right only 20 times, you can still make money. But you need to understand that you are right only by 20 times, because when you understand yourself, when you know you are a weaker hand, when you know you are a shorter person, then you can choose the instrument accordingly. But if you believe I am a stronger being a weaker person, that is a big reason why people go wrong. I hope you understand what I'm trying to convey. All you need is just to patiently listen what I'm trying to convey here. Doesn't matter you are a weaker person, but you should accept that you are a weaker person. Whenever I'm predicting, it not necessarily turns out to be in the way it has to come. But when I understand that I may go wrong, then I form the strategy which may be conservative, may be widely good to make money. So for that, you need to understand the instruments. If you look at EQSIS equity, EQSIS futures, EQSIS call, EQSIS put, EQSIS different calendars, EQSIS different strike price, everything got a different characteristics. So if you really understand those instruments, you get a lot of advantage over the opponent to make money. If you ask me in what way EQSIS can actually help you in providing the support, let me actually quickly take through a couple of instrument characteristics so that you understand it well. Okay, let me get into this. Okay, so if I get into my practice portal, okay, EQSIS Primer, all I have to do is just to log in. Okay, now this is what I say when it comes to understanding the market direction. So if I wanted to pick up the, before you form any strategies, what you people have to do is actually make up your mind that what exactly your decision. Are you bullish or a bearish or a neutral? First you make up your mind. That matters a lot. Okay. Now I see the markets were closer to 11,699. I see the charts and it is pretty close to the resistance when it comes to this one. Of course, you do any technical analysis or quantitatives, whatever it is, but you document yourself and make up your mind to a stance. You take some stance. From there we can actually go for a strategies. Okay. Now then I see there is a support coming around 11,500, and I see there is a resistance sitting around 11,800, and this, I'm expecting the market to be a bit more neutral this time. So I see the market to stay between 11,500 to 11,800. Okay, now I see there is a downside range for the market is around 11,300 to the upside range of 12,000. Okay, that's a very broader range. Now I'm not here to explain each and every aspect of this. Okay, but you try to understand my overall context. Okay, the stock is trading within the range. as far as the price pattern is concerned, the trading at trading at resistance zone, and as far as the range bound trading behavior. Okay, and we see that the stock is okay. Now these are the two aspects we have, and now what happens is wants to adapt it. I didn't see any breakout happen so far, so I'm trading nearby the resistance. So I would like to take advantage of the time value. So be positive with neutral bias. Okay, now try to understand what am I doing it. Of course, if you need some insights, this portal can give you some insights. 11,800 provides the maximum open interest on the call, and 11,500 has the maximum open interest on the put. I mean, this resistance support, and 339 points range is there with respect to the market. So 339 points from here is about 12,000 on the upside, and the downside is something close to 11,400. I can say that, or 300. So on this 350 to 400, I think that is how the markets are, the broader range we kept it. So if I submit myself, so it just take a few minutes and it submits my view. So now look at this particular one. My view is, after all, gets documented. Of course, if I want to look at other people's views, it is available. But look at this, as far as my view is concerned here. I've made up my mind that this is what the market and this is the strategy I'm planning to adapt. So now when I build my strategies, this is what I said. My views can go wrong. My views, my expectations in the market can go wrong. Even the market can turn to be bullish, or market can become very negative over a period of time. But now I should understand myself that whenever I take a call, hardly it happens. So better be conservative. Better, if I feel this time the chances are quite high that I'm gonna be right, then I can be aggressive. But having known that's a neutral behavior, now look at this. This is what I said. Buying 11,500 or buying 11,600 shares the very different characteristics in the market. So when you understand that your expected move is actually between 11,500 to 11,800, what should be the ideal way of making money? So it means, I am expecting the market to be between 11,500 to 11,800. There I really wanted to make money. So it's not like I am pretty clear about the market direction. I'm not saying the market to go up, I'm not saying the market to go down. So what are all the ways to make money? So of course what I can do is I can actually go and pick up the put options, which is 11,500. Okay, if I pick up 11,500, that is not the smart way of making money, because 11,500 put option makes money provided the market falls below 11,500. This is a very common mistake a lot of people do, because sooner they expect the market to be at 11,500, they simply go and buy because it offers a cheaper premium over this. Rather, what I recommend is better I buy 11,600 and I sell 11,500. In a way, my net premium still remains the same 19 rupees or 20 rupees, but I get an advantage because even when market reaches 11,600, I end up making a favorable return. So my break even becomes much more approachable. And of course, if I want to take a little more advantage of it, I can actually go for into two quantities. Now look at this. Even if a market doesn't go below 11,600, I still don't lose anything. Hardly I risk only 1 rupee out of this. So in that case, I have a profit zone which stays around 11,500. The same I can do on the upside, which is I can even buy 11,700, or probably I can actually buy 11,800. I can sell this into two quantities. So now if I do so, it actually it's about buying and this is about selling. And if I go for two quantities, I think now you can actually understand that if a market stays in between 11,500 to 11,800, actually Murugan is not making money. That is how, I think, look at the strategy here. I was trying to adapt a strategy which I generally form, but this is not the right strategy I should form, because if market stays anything in between, I end up losing 6 rupees. I think that, but if a market shows a volatile behavior, there is a chance I can actually make some good moves. So in both the sides, we have a shock absorber. So what I can actually do is I can shift this slightly nearby. Okay, look at this and try to understand what actually it gives me. So, and if it doesn't give me much advantage of it, okay, then it's all about you people just try with the current premiums to take an edge over it. Now look at this. Now I have a break even which is around 11,527, and on the upside there is 11,872. In between we have a good comfort zone. So being a market, if I see a market above 11,527, I end up making money. So at least a 22 rupees a minimal profit, a max profit can go up to 70 or 72 rupees, and it gives me a range of 11,000 500 to 11,800, and we have a 2 days to expire. And if I feel this is really good strategy, I can actually save the strategy, because I hope you guys can see, and of course you guys can change anything if you wish to do. But when you save this particular strategies, it gets saved, and of course you guys can actually document this over a period of time. So if I go for reviewing my trades, this is the most recent trade we have actually developed. Before that we have Kotak Bank and everything, and you can look at a lot of other people trades. But remember one thing, when you have a habit of documenting your analysis and developing such trades, it makes your job much easier. Okay, by the way, I just wanted to introduce one interesting thing for you people. We have did is we've just got into, if you guys interested, you can definitely go to equities.com, and we have something called, under training module, we have an online training module, even for a beginner or those who trade in options, wants to fine tune the fundamental aspects, can consider the option trading strategies workshop. Because as far as the first one, which is the option trading strategies workshop, is concerned, it's something which addresses even the beginner, and we have mostly once in a month we must be having a program, so you can definitely look into it. In this particular program we have a content. Of course we do have a classroom sessions, but we yet to start the classroom sessions because I'm recording this content, this video on the pandemic time. We still wants to find some more time to start the classroom sessions, but if you someone who see this video at later point of time, you can definitely look at our link and you can check out whether the slots were open for that or not. But at this moment we are taking registrations for the the online module. But if you actually scroll down, you see the content here that we wish to start from the scratch, making you people to understand the risk and returns and the characteristics, when to choose what instruments. But it's gonna be a full pack which makes a beginner to an option feel like a pro matter of one day. But a matter of one day may not be enough, so you need some practice portal. Of course you will be given with a practice portal and exclusive access here, and you will be doing something, and we actually provide comments, and you can also interact with the other people. So when you click on Yuvraj now, and he formed a modified butterfly strategy, and it shows the Yuvraj strategies to you. So likewise, if I click on Lalita, it shows me all Lalita's strategies here. So I think there are a lot of ways you guys can actually interact here, and this makes access to follow you even after you complete your a practice session. So that is how we say that it is not going to be one day session here. You will also be having a 4 strategies will also be provided, and you guys can also take part of a weekend discussions which we have on every weekend, talking about the following week expiry strategies. That helps us to decide what directions we have to plan and choose the instruments accordingly. Hope our services will be really useful. But by any chance, if you are a pro trader, we recommend, if you know that all of these stuff, whatever is available here is known to you, then better you can actually consider our option chain analysis, because there we talk about open interest and option chain analysis, but that's more of timing the market. But the basic program is more of finding the instruments. But the instruments plays a crucial role to the success of the option traders. Hope our access service can make an option traders lot more comfortable and lot more successful going forward. If you find anything to comment, feel free about expressing your interest in the comment section. And do read this content before you actually enroll yourself. And of course we have some coupon code which is available for a short run, maybe EQSIS 2020 for a limited participant. So if you are an early viewer of this video, you may be interested in using it. If not, you can look at any coupon codes by the time available. Thanks for watching this video all the way this minute. Yeah.